Greetings, everybody. This is Professor Hussein here again with ASC 2320 Aviation Law and Regulations, Chapter 6, with regards to aviation insurance. We'll cover that as well. Um, what is what you will be gaining from this chapter, if you read the whole chapter in its entirety, obviously to equip you with working knowledge of aviation insurance, sufficient to enable you to determine insurance needs of aviation businesses or general aircraft owners or operators are order the correct coverage. Analyze policies received to ensure that it actually includes all features that you order, adequately covers your needs, and contains no unanticipated pitfalls or other unpleasant surprises. So obviously, when we look at aviation insurance, as you probably know by now, and that this is it's more complicated than you would think it is. There's a lot more things to cover, and eventually uh, covering all eventualities is impossible. But you want to make sure that we do cover, you do have a coverage which will, at the end of the day, not just save you from heartbreaks and heartaches, but have you have proper coverage. That's what the whole purpose is. When changing circumstances, make changes in insurance advisable. Uh, Aviation is sold by agents, brokers, directly by some insurance companies, just like any other insurance. We do have insurances for our vehicles as well as if you have a home, we have insurance that for that as well. So we want to make sure that we contact the proper channels through proper channels and get the best coverage we can. An insurance agent represents one or more insurance companies as a salesperson and is usually compensated on a commission basis by percentage of premiums collected on policies sold. While also engaged in selling insurance, brokers differ from agents in that broker is not contractually bound to represent a specific company, but is free to represent you, the buyer, in shopping around to find best available deals. Brokers' compensation is also by commission. For some insurance companies like Avemco, sell insurance directly to the customers, either over the telephone from national offices having toll-free numbers or online set of sales and networks or agents or brokers. Insuring and underwriting. Insuring is the insurance company. In general aviation, most policies are issued by a single insurance company. That company carries entire risk responsibility to pay for insured losses under the policy. About 21 insurance companies presently offer insurance coverage for aviation risk. Underwriters in most airline insurance policies spread the risk of several insurance companies through a process of underwriting. This is generally done through clearinghouses, such as underwriters at Lloyd's of London, who incidentally wrote history's first insurance policy. There are many other insurance companies are represented. When a request is received to quote a rate to provide particular insurance coverage for an airline, the clearinghouse affords the participating company's representative the opportunity to subscribe to cover a portion of risk for a stated price. Once the various subscribed insurance companies' portions total 100%, the clearinghouse quotes the total price, and if buyer accepts it, issues a policy or a certificate of insurance. Claims if you have an accident, you are required by policy to immediately report it to your insurance company. Just like anything else, there's always that number you need to call. Policy itself should state to whom the report is to be made. When in doubt, first call the agent or broker who sold you the policy. Claims on the policy will be investigated. Settlement offers extended by insurance adjusters. Adjuster represents the insurance company in determining whether the loss is covered by policy, or if so, monetary value of damages, extent of insurance company's obligation to pay. So just like anything else, whether you were involved in a vehicle accident or not, the same thing happens with this as well. that you are supposed to get an insurance adjuster, make sure that your claims are covered and you get get compensated in due time. Insurance principle, there are two basic principles: underwriting the insurance, spreading the risk, and minimizing the risk. Spreading the risk is an element of risk involved in all aviation operations. Aircraft accidents are statistically improbable events, but financial consequences can be disastrous to an operator. Insurance serves to spread the risk of that unlikely but potentially catastrophic events over many similar operators, as much as all have contributed their premiums to a common contingency fund to cover such eventualities. By spreading the risk in this fashion, we enjoy a situation in which an adequately insured operator does not face the risk of financial ruins in an event of single accident. Underwriting accomplishes the same thing for insurance companies, spreading the risk among several companies in a pool that underwrote the policy. It works. Even the most disastrous aviation accident in history, the runway collision between two fully loaded airlines 747 on a foggy day at Tenerife Airport in Canary Island, not one insurance company had the underwritten portion of insurance involved suffered financial ruins. Neither did either of the airlines. So, in essence, it spread the risk to several companies, which paid off the claims by obviously two airlines, which is Pan Am and KLM. Insurance companies, insurance company insuring airports, airline, other high dollar value risk offer and reinsure a portion of their potential liability under policy with another insurance company. Reinsurance may be done either on a pro rata basis with results similar to sharing the risk underwritten through clearinghouse or exercise with it first insurance company required to pay for. Example, all losses in a 20 million aircraft liability policy up to first 10 million, with the reinsurer responsible to pay losses falling within the next 10 million of the coverage. Think of reinsurance as insurance for insurance companies. Operators perceived as being the safest are able to purchase insurance less expensively than the operators. Below average operators may not be able to purchase insurance at any price. For business aircraft operators, implementation of safety management system (SMS) has an immediate favorable effect on their aircraft insurance rates. And just like we have safe drivers policies, where certain insurance companies will give you points for not having speeding tickets, for not having any claims and accidents. Similarly, airlines have this insurance for airlines also do the same thing. That means if they are following FAA or ICAO's with reference to safety, the safety management system. That means they are implementing safety programs at their within the company from top to bottom. This is held favorably with the insurance company, and that reduces their premium as well. Minimizing risk, companies have long recognized the value of accident prevention in avoiding claims against their policies. If the insurance company views the operators as an accident looking for a place to happen, operators may find it impossible to purchase insurance at any price. Among operators considered insurable risk, one factor used to compute the price premium of coverage is the insurance company's best estimate of how likely this operator is to have an accident. So just like anything else, we all know when we were teenagers, right after high school, we had to pay arm and leg for insurance because they knew the newer drivers, teenage drivers are prone to drive, speed, And to avoid that, they do give you higher premium for a couple of years. And then once you build up your credit, that means your record and your license, that's when the premium starts dropping. This way, it helps you maintain a reasonable priced insurance for your coverage. And if you are prone to speeding and accidents, then obviously you will be punished by paying more for your insurance policies. Insurance company insurers expect the person and business they insure insured to demonstrate attitudes of protecting policy, taking care of to avoid accident. If after issuing policy, insurance companies learn the operator has reduced his pilot's training program, is deferring maintenance, outsourcing maintenance to substandard sources, or otherwise reducing safety margins, the insurance company may have become concerned that accident is more than likely than originally estimated. In that case, company may cancel the insurance coverage, often as little as in 10 days written notice. Although if it does, company may refund any unearned portion of the premium. All prudent aircraft owners, whether aviation business, using aircraft in support of business enterprise, or recreation flying, should have aircraft insurance, including both liability and hull coverage. In addition to the workers' compensation insurance and unemployment compensation insurance discussed in the last chapter, aviation business may also need airport liability insurance, including premise liability and hangar keepers liability, as well as products liability. Prepaid legal services or loss of license insurance may also be desirable to defend your personal pilot or mechanic certificate or to protect your income during suspension and revocation. Excess liability coverage may also be prudent. A comprehensive aircraft insurance includes two distinct types of coverages, liability and hire. Liability coverage covers liability for injuries to other, including passengers in aircraft, person, property on ground, and other aircraft and occupants. It generally does not cover flight crew members who are expected to be covered by workers' compensation insurance for professional pilots and health and life insurance. There are two types of policy limits that may be available in selecting the liability coverage in your aircraft insurance policy. Single limited, also called smooth or per person limits. Under $1 million single limit policy, insurance will pay up to a limit of total injuries of total number of passengers and person on the ground injured. Many general aviation policy have per person limits, such as total limit of 1 million with typical sublimit of $100,000 per person, per passenger, or per passenger seat. For average 4 to 6 seat general aviation aircraft, such low sublimit usually results in $1 million limit of being mythical beyond each of your injured passengers and persons on the ground. Whereas hull coverage, this covers damage to or destruction of insured aircraft resulting from an accident. It generally does not cover damages to aircraft's engine in connection with engine failure. However, if engine fails leads to other damages of aircraft is an ensuring off-airport landing. Damage is not excluded merely by virtue of engine failure, having set the consequences of the event in motion. Hull coverage may be purchased to cover all risks while not in flight, and all risks while not in motion. For helicopters, coverage may be further broken down to include all risks while rotors are in motion, all risks while rotors are not in motion. For operable aircraft intended to be operated, not only all risk hull insurance will cover virtually anything that might happen to the aircraft. The lesser coverage, though a great deal less expensive, are suitable only for aircraft that are not operable and not intended to be operated, such as aircraft undergoing long-term restoration, rebuilding, or modification that will preclude flight in the near future. Valuation buyer of hull coverage may have a choice between methods of valuing the aircraft for purpose of determining the amount to be paid by insurance company in the event of accident, resulting in a total loss of aircraft. Aircraft is considered a total loss when it becomes economical for insurance companies to pay the entire value of hull insurance and then sell the wreckage for salvage, then pay the cost to repair the aircraft. It is usually the discretion of insurance company to decide whether to treat a particular hull damage situation as total loss or pay for repairs. And this is simply put it, is simply just like car insurance. If you get involved in an accident and the car is total, or there's quite a bit of damage, the insurance company will send an adjuster. He will evaluate your vehicle and see if the damage can be repaired. If it's unrepairable and they think it'll be more expensive to really get you back in the same car, and they'll rather pay you off for the value at that present time. Purpose of use, another fundamental choice you have to make when ordering aircraft insurance coverage is to intended purpose of use of aircraft. The purpose of use describes the kinds of flight operation to be covered by the policy. In order to increase premium, typical purpose of use includes pleasure and business, industrial aid, limited commercial, commercial accept instruction, or rental, commercial, and special use. So it makes sense to make sure that you are giving the purpose of that aircraft, which will dictate the premium as well. This coverage includes everything covered by pleasure and business, as well as transportation of your businesses, executives, employees, guests, and customers. Again, again, excluding any operation for which a charge is made. This is the appropriate coverage for most corporate aircraft, assuming the aircraft is dedicated solely to corporate use and never rented or chartered to others. The next two, commercial accept, instruction, and or rentals. Limited commercial are really opposite sides of the same coin, easily confused, so professors often focus on distinctions in exams. Commercial accept, instruction, or rental. This covers all uses covered by pleasure and business, plus industrial aid, plus transportation passengers or cargo for hire, but excludes commercial flight instructions or rental of aircraft to other pilots. If the business does only charter flights or cargo or mail hauling or passengers, scheduled passengers carrying, but never does commercial flight instruction and never rents the aircraft to other, this coverage is adequate. Limited commercial, this is the flip side of coin, opposite of commercial accept, instruction. And limited commercial includes all operations covered by pleasure and business, plus industrial, plus commercial flight instruction and aircraft rentals to other pilots, but excludes carrying passengers or cargo for hire. If you're a freelance flight instructor working with your own or customer's aircraft, or FBO not holding CFR 14 Part 139 air carrier operating certificate, so the aircraft used only for commercial flight instructions and rental. This may be adequate coverage. Generally referring to full commercial, this covers every kind of operation we have discussed: pleasure, business, industrial aid, carrying passengers, cargo for hire, commercial flight instruction, rental to others. This is the coverage needed by full service FBO. But even this may not cover some of the more risky operations considered under special uses. Special uses is flight operation that insurance company believe that involves higher risk of, higher level of risk than those just described as rated as special use and may pay higher insurance premium. This might include agriculture, aviation operations, operation under FAR waivers, aerial firefighting, helicopter external load operations, helicopter flight training, banner, light towing, fish spotting, power line and pipeline patrol, emergency medical services operation, etc. Coming to the most important thing is pilot qualification, and there's another thing which most insurance companies look through is look at the pilot's insurance, what we call certification as well. Another decision you have to make when ordering the aircraft insurance is keep in mind the future to be sure the flight operation to be covered by your aircraft is pilot qualification requirements also referred to open pilot warranty. And this means that you need to have experienced pilots at the in the cockpit so as to making sure that you have adequate safety behind. Typical scenario in which commercial operators gets into trouble goes through like this. Air cargo business operation law Part 135 has a very strict qualification for hiring pilots, all those reflected in the company's company insurance pilot requirements. These have helped companies obtain a relatively favorable price for this insurance. During pre-Christmas rush, a major express company calls seeking extra aircraft capacity. The big company offers a very attractive rate to operators to help out, but operators' present pilot complement is already flying up to limits of duty time permitted by FAR. rather, rather than pass up what appears to be a golden opportunity, operator temporarily hires additional pilots to handle extra work and lower its standards by hiring pilots who fall short of requirements of insurance policy in order to meet this need. Operators flown by these pilots will be uninsured. Insurers may cancel the policy out of concern over insured lower standards. So it's important for us to really make sure our pilots are qualified and meet the requirements of insurance companies. In this example, it might be more economical for operators to pay additional premium to lower the pilot qualification requirements of its aircraft insurance policy to take advantage of business opportunity. Murphy's law as applied to aviation insurance say that if you have an accident, it will happen before your insurance becomes effective. After it has expired, within the policy exclusion during operation of for purpose not covered by policy, while the aircraft is under command of unqualified pilot. All it in essence means is obviously looking at it seriously. Uh, this go back here. This Murphy law applies just like anything else. Let me go ahead and repeat: before your insurance policy expires, after it has expired, within policy exclusions, during operation for purpose not covered by the policy, while aircraft is under command of unqualified pilot. It will happen, so make sure you do not fall in this trap. War risk exclusion and insurance. Typical war risk clause is Lloyd's Form AVN 48B, captured in the war, hijacking, other perils exclusion clause. Although exclusion has been included in most aircraft insurance policies since reinsurers first required it in 1968, it has merited little concern on the part of domestic operators until recently. The new reality of terrorist activity against civil aviation targets worldwide using commandeered civil aviation aircrafts within the US, as weapons suddenly focus attention on the true broad breadth of exclusion brought some realization of exposure where aircraft operators face for uninsured losses even in domestic operations. War violation exclusion clause. Watch out for FER exclusion. This has become quite rare but still turns up occasionally. This clause says if the operator was in violation of FER, it is excluded from coverage by insurance companies. FAR is so sweeping in scope and many instances so vaguely worded that it will be very rare accident in which industrial insurance adjuster could not find something about operation arguably in violation of FARs, that is, careless operations. Ordering the policy. When you order the policy, you intend to operate the aircraft in the near future. You should ensure that an agent or broker with whom you are dealing who has insurance company authority to bind coverage. If this is an agency or brokerage within whom insurance has had a good working relationship over some duration, the insurance company will show its trust and confidence by authorizing them to issue a binder locking in insurance coverage. Whether they are unmanned aircraft systems or unmanned aerial vehicle, remotely piloted air systems, or simply drones, they are aircraft in the eyes of laws and insurance industry. While FAA in its writing is still well behind in schedule finalizing and publishing regulation of these aircraft, insurance industry has recognized the potential for scope of that market, positioning itself to serve it. Because the aircrafts are relatively new on civil aviation scene, there's not yet a history of claims insurance to guide insurance companies in setting rates to insure them. So these type of policies are still up in the air as we move forward in the coming years and months or years with reference to drones. We will be going through a lot when it comes to coverage and when it comes to getting guidance from insurance company as well with regards to what type of coverage unmanned system could get. Spacecraft insurance, Launch Act of CFR 440 requires commercial space operators to obtain third-party liability insurance to cover insurance to personal property on the ground or aircraft that may result from mishap involving launch or re-entry of aircraft. The U.S. government indemnifies U.S. launch operators by providing catastrophic loss protection covering third-party liability claims in excess of required launch insurance. Currently, launch operators are required to buy third-party liability insurance for up to $500 million in addition to insurance for their vehicle and its operations. U.S. government then provides up to $1.5 billion in indemnification for claims above and beyond that insurance. Airport liability. If your business is operated on an aircraft, you will also need to. This may include premise liability and hangar keepers liability. Premises liability covers injuries to non-employees occurring at your place of business. For example, if your business is an aircraft repair station, visiting customer slips on an oily spot on your hangar and your hangar falls, suffering injuries. This is insurance that may pay for these injuries. Any business, no matter where it is located, should have premise liability coverage. It is just that if your business is on the airport, this coverage becomes part of your airport liability policies. Then we have aircraft title insurance. When purchasing aircraft, it may be wise to purchase aircraft title insurance to protect against defects in the title that will not be revealed by a title search of records of FAA, aircraft registry, and international registry. This title search is process is discussed in detail in Chapter 11. Title insurance is most appropriate for corporate aircraft and is usually too expensive for transport category airlines, and the cost is difficult to justify light signal engine piston powered general aviation aircraft. This is it for chapter 6, and I shall continue with chapter 7 in the next session. Thank you and have a great day.